Hello, my name is Rahim. In this short video, I'm going to share how to pull out equity from your home and invest. Before we get going, if you like this video or any of my videos, hit the like button below, subscribe to my YouTube channel for more of these videos. Before I start, I need to do a disclaimer and a warning to you as well. The things I'm going to share in this video is purely based on experience and knowledge I've shared with my student or the people I work with to enable them to pull investment or to use their property, their current residential property, to invest in real estate. So if you ever want to use this sort of strategy, you need to find a qualified mortgage broker or financial advisor who would advise you how to use your residential property to invest in real estate or any adventures you want to get into. I've been asked so many times, how do I really use my house to start investing in properties? People have asked me this question so many times. Some are retired people, some are people who've owned their properties for over 10 years, some are people who've just been living in their property for over 40 years. They really want to get into the property ladder so they can use property as a way of pension where they could get money after they have retired. So some people, when they want to invest in real estate or properties, well, what they tend to do basically is to sell their existing home, pay off their mortgage, and use the remaining money to buy investment properties, right? Or some people, what they would do, they would sell their home, downsize to a smaller house, and use the remaining money to invest in property. But what I'm going to share with you today is there's a different way. There's a different way you can take advantage of your current home to be able to invest in properties, at the same time have your own residential home that you don't have to worry about. So let's get to it. There are two ways you'll be able to use your property, your current residential property, your home, to be able to invest in real estate or property investment. Number one, you could use something that we call further advance. This is when you have your own property and you have lots of equity in that property. You can go to the bank and the bank will lend you money based on the equity you've already had in that property. So you can use that money to buy property investment. Let me give you an example. So you bought a house, your residential home, 5-10 years ago for £200,000, right? And you put down 25% of that £200,000, which was £50,000, and your mortgage was £150,000, assuming that your mortgage is interest only mortgage. So today's value, that property may have gone up and it's now worth £350,000. If you want further advance, or if you want to take up loan from that equity you've already had in that property, the bank may be able to lend you up to 75% of the current price, which is the £350,000. So 75% of the £350,000 would be £263,000, less the mortgage you'd already had when you bought the property 10 years ago, which was £150,000. That will then mean you have an equity of £113,000 since you've bought the property 10 years ago. So therefore the bank may be able to lend you up to £113,000. So what is the £113,000? The £113,000 is 75% of the £350,000 property value now, less your mortgage, which was £150,000. That gives us the £113,000. So if the bank know you've got that equity in your property, they can lend you any money up to the £113,000. It could be 10,000, 5,000, 50,000. So you'd have that credit line basically that allow you to borrow up to £113,000. But what you need to aware about here is if you use that equity line, if you use that credit line, the bank would have to create a different sort of account for you, and you'll be charged interest on whatever amount you've borrowed from that £113,000. So if you take £50,000, the bank will charge you interest on that as well. If it's 10,000, whatever amount you've taken out of that £113,000, the bank will charge you extra interest based on that loan. And the good news of that borrowing also, because you do not buy and sell any transaction to make that money is also tax free. So you can use that money to probably invest in property. And also, if you use that money to invest in property, the good news is the interest you pay on that loan, say you take up 50,000 for example, you don't pay the interest. Because what would happen, you use that money to buy an investment property. Say you buy a buy-to-let or something like that, you rent it out to a tenant, and that tenant's rent would include some of that money that you need to pay on that £50,000 loan. So again, you're not really using any of your money to fund the investment property. So you could use further advance to actually pull some of that money out and invest it in buy-to-let. The second option you may have is something that we call a remortgage option, similar to the further advance. The difference here is what the bank would do, they would send a valuer to go and value your property to see if that property worth £350,000. So if the property worth £350,000, the bank will lend you 75% of that £350,000, which you and I now know is £263,000. So what they now do, they will pay your existing mortgage, which is at £150,000. So they pay that off, then you've got the leftover of £113,000. So that £113,000 can be paid from your solicitor's account to your account. Why it goes to solicitor's account? If you're doing a remortgage, especially from a different bank, so what your solicitors do basically is to get the 75% of the £350,000, hold it in their client's account. They pay the existing mortgage, which is £150,000, and they pay the remaining £113,000 into your account. So then you can use that £113,000 to buy lots more investment properties if you choose to do so. And the good news about withdrawing that £113,000 max is it is not tax deductible, because you haven't made a transaction, buy and sell something to make that money. Okay, so what you could do, basically, you could use that money to buy more properties. But what I would like you to note here is, because you're taking a new mortgage, your interest on the loan would be higher, because your mortgage would have gone up, because your mortgage would have been 263,000, which effectively increase your loan interest in that property. But what you need to know is, basically, if you're buying investment properties, your tenant would be paying that interest for you, because they'll be paying rent, and some of that money that they use to pay your rent, you can use that to pay the interest on the additional interest you would have paid in your residential property. I have some of my students, I have used this strategy effectively. Some of them came to me and saying they don't have money to invest, they are really struggling, their job is giving them so much pain, and they really want to get into property investment. So what we do, basically, we looked at their residential house. Some of them got lots of equity in this property. Some of them have been in the property for 30, 40 years, and they've never ever remortgaged. So what we did, when we look at their property portfolio and their financial situation, I then advised them there is a chance they'll be able to withdraw up to 200,000 in some instances in their residential property. And guess what they do? They use that money and buy lots more investment properties, now generating them passive income. Okay, so you could be doing the same thing. If you may be sitting in a property that you haven't remortgaged for a very, very long time, it's time to consider thinking about how you could raise that capital to invest in buy-to-let. That being said, seek professional advice. Could be a mortgage broker, financial advisor, or an accountant who would advise you on how to efficiently withdraw this money to ensure you invest it efficiently. And also, do not withdraw the money or do a further advance if you do not know what you need to do with the money, because you don't want the money sitting in the bank doing nothing. What happens? Inflation takes into effect, and then obviously you will start spending that money in things that don't really add value. So I advise that you get yourself ready before you execute this sort of thing. So if you want to know more about what I do in terms of properties, or if you want to get into property, I run a free property investment crash course. Every month is completely free. You can come around, join us, and I will share all the recent property investment strategies and the strategies I use to get me to financial freedom, and the strategies that enable me to own and manage a multi-million property portfolio. And I would love to have you in one of those events. And I also have a free 30-minute strategic call where you would call me, you will book me in for 30 minutes. I will sit with you for 30 minutes completely free to discuss about your property stuff, to talk about yourself, what you want to do, and if there's any way we could help you, we would find a way that we could work in a way that we could help you start investing in properties. And I'm also inviting people in my office or in my home to spend a day with me in a form of discovery day. So on that day, it will be about yourself, your business plan, what property strategies. We will talk about yourself and pinpoint which property strategies we think is suitable for you. We will help you do a business plan, and then obviously you then take that and go and execute. Okay, I really hope this video has been helpful, and it has shined a light in something that you will be doing in the future. Do not procrastinate in it. Do not think about it. Just go ask the professional advice and take action and get to do what you intended to do. Maybe you're sitting in a gold mine. Maybe your property has gone up significantly. Sit down, look at that property, and see how you could use that property to invest in real estate. If you like this video or any of my videos, hit the like button below, subscribe to my YouTube channel for more of these videos. I look forward to sharing the next video. Thank you.